Hi there, traders. This is Brad Gilbert with today's trading action. All right, now lots going on. Let me just sort of give you a rundown what's going on. Now, the Fed policy makers signal rate cuts ahead, but not recession. Now, yesterday, this is where the media comes in and whatever else. You know, they're talking about the weak US non-farm payrolls. All of a sudden, the US is going to be in recession and it's going to be dire straits, right? And what we saw with that, right, is a rush to the safe havens. Now, this is part of the trade that we were putting on Friday, was looking at dollar yen, right? And if I just come over to look at the majors, now there was already a rush to the safe havens following the non-farm payrolls. And that was sort of pretty obvious as we were going through that trading day. Now, I did put out a trade alert on dollar yen, right? Break of this level here, around 148.70. We've been down to 141.75. Now, safe havens, they're buying yen, buying Swiss, right? Just on the whole global growth situation with the weaker US economy and the fact that the Fed were going to be cutting rates. All of a sudden, that turned into major recession, like this is the media, right? Blowing it out of proportion like the global financial crisis. And that led to a massive snowball in the yen, right? And what we saw is, if I just come back to the daily charts here, a massive sell-off on the carry trade, right? They were buying in against everything. So you saw Aussie cleaned out, Euro yen, Sterling yen, Swiss yen, CAD yen, right? It was a bloodbath. Now, these things have bounced about 400 points already, right? Back to where they were. That sort of snowball panic, right? At the time, everyone's just liquidating because they don't know what's going on. The markets have stabilized, right? You look at the global markets, equities, which were getting hammered yesterday, making that correction, right? It's just like an imbalance goes through the derivatives markets and it triggers a lot of fund managers to liquidate, right? That's how it sort of goes through. US interest rates, though, are lower, right? They're lower than they were yesterday. Is there uniformity on the major currencies? Absolutely not, right? You got most of them going up when some of them should be going down if they're quoted against the US dollar. So equities up, interest rates down, discombobulation on the currency. So just be careful what's happening at the moment, right? You've come back to the hourly charts and we can sort of see, okay, you can see where things are going and moving, but it's very hard to get in, right? I've just left sterling here like it is. This is a dog's breakfast as far as a technical setup. Euro looks like it's found a nice home here. The giant has awoken, and I was talking about that last week. We need Euro to be moving, right? If it's not, everything else and all the traders are scratching their heads. Now, Aussie dropped 150 points yesterday, and it's higher than where it was, right? So once again, we might see a move to the top side here, weaker dollar. I wouldn't be surprised to see Euro, Sterling, Aussie, Kiwi higher as the positions that were put on yesterday are liquidated at the back end. So the commodity currencies, Aussie, Kiwi, and the CAD, all doing better, right? So anyway, it's like mental, right? This happens rarely. Does this happen, right? So if you're not used to this, well, this is a little bit of chaos in the financial markets. Now, the other part of chaos, and this interest rate probabilities page is, you know, it's put together with a lot of assumptions and derivatives moves and swap point moves and all this sort of stuff. Now, they are factoring in a cut of 0.75 for the Fed at the September meeting, right? 73% chance. Now, I'm not surprised, to be honest. I think they'll only go by a quarter, but I think there's a discombobulation in the derivatives market, which is giving us this probability. I think it's still 0.25, but this is the thing about being objective. Look at the data. This is what it's telling us, and this is why the market is moving erratically. So everyone's on a cutting cycle. They can't get there soon enough. And this brings in today's trading action, right? Because we do have the RBA. Now, the RBA have got their head in the sand, right? The poll 4.35. No change of rates expected. In actual fact, there's a slight chance of some respondents have put in a hike. There's no chance of that happening, right? In actual fact, when you come back and have a look at where the derivatives point us towards, if I come back and get into the Aussie dollar here, this is the interesting part about it. You come in and, you know, this has changed dramatically from last week. but there's a cut. There's a 10% chance of a cut here, right? Today, 90% chance they go unchanged. And you know what? Still September, right? Largely expected no change. I can see that sort of swinging towards a cut. But so today, expect the unexpected. If there's panic in the market and the Fed are moving, have all of a sudden moved towards a 0.25, a 0.5% cut in September, you might get a surprise move out of the RBA, right? It's a stretch, but that's what we're talking about. Now, the other thing is when you look at the charts, right? Every piece of data at the moment, I'd expect it for the next day or two and still until things settle down, including myself, the data is super reactive, right? That's because there's less liquidity in the market. These huge moves, and you can see them clearly on the daily charts, these moves bring about a big shift in liquidity from the banks. They pull back. You see huge ranges. Don't think they're easy, right? Look for good setups. Look for good opportunities. Technical levels, if you have them, right? As I said, this will settle down in a day's time. It does make trading the RBA a little bit harder, right? Because we're dealing with a number of different variables now. We're dealing with, the whole global growth story. Is that good or bad for the Aussie? Well, it's not good for the commodity currencies, but we are seeing a big sell-off now. What we are seeing is the move is coming back towards, okay, hang on a second. This is not about global growth now. It's about the dollar cutting rates aggressively. And that should give us uniformity, but the market really, as one unit, hasn't recognized that yet. And when they do, things will start moving together once again. But right now, I look at the market and I use this dashboard as a benchmark. The major currencies are not working with the equity markets or the US Treasury yields, right? Yields in the US down, equities are up. That is correct. Euro, sterling, Aussie, Kiwi should be up. The dollar should be falling against everything else, but it's not. So that makes it very tricky. As you can see, the beast, a bit of an unwind of those moves yesterday, and it's not surprising, right? 150, 200 point move on a big day, yeah, sure, but not 500 or 600 points. That's mental. And so what we get is tricky markets. It will make today's interest rate RBA decision a little bit more interesting. Do I know which side to trade? Right now, as I'm looking at the markets, I'll have to wait till closer to the point. We'll have to wait and see how it plays out. But I'll cover that in the live trading session as we move forward. You know what? Aussie's set for a move to the top side, but you know what? The fundamentals right now are all a little bit out of sync. And that's why we need the markets to settle so everyone knows what to do, right? Buy dollars, sell dollars, whatever it might be. Let's do that. And you'll see that on the dashboard before anywhere else. All right. So anyway, don't think you're missing out, right? As I said, the bankers, no one's trading. That's what we're seeing, the huge ranges. Sit back, relax, watch the carnage unfold. And then when the markets line up, we'll get back in. All right, guys, have a good one. All the best. Cheerio.